Let me get into a string of healthcare payers. So the first one is going to be Humana. Now, Humana was just getting destroyed yesterday, and it's down 12.5% over the last month. It's down substantially over last year. And div- healthcare insurance payers, this is what we buy here in the US, and I'm not sure how other countries do it, but in the US, we have private healthcare as well as, to some extent, government run healthcare. But it's always kind of a combo, right? Even if you do Medicare, which is what people receive once they get to, I believe, 65 years of age, then you get paired up with an insurance company that manages the whole process of you going to the doctor and getting that doctor paid and so forth, and telling you what your benefits are under the Medicare plan. You could also buy additional benefits in a Medicare Plus plan. For citizens under the age of 65, you buy healthcare through your employer or you buy healthcare as an individual. Humana and is with its subs provides medical insurance in the U.S. So they have this supplemental plan. I believe they do quite well with Medicare, right? So this is supplemental plans that, we as citizens already qualify. If you paid into the system, you qualify for Medicare, and then you can get this supplemental insurance. So you say, hey, this is my base coverage, but then I want to have more coverage so I can get better health care. And that's where Humana operates. It's a big outfit, 67,000 employees. Now, you see a stock that's going down 47%, and you think to yourself, boy, their revenue must be crashing and burning. We'll see how that looks. $28.67 billion in market cap. It's a huge company, 115 billion. PE this year is 21. Next year, it's going to drop to 14.8. Analysts think it's a hold, but it's discounted. So when we look at revenue growth, the stock is down 50%, just using round numbers. Revenue's up 12%. Those are two opposite trends. You have the stock is being sold off. Humana has been an undesirable stock to the market. It's been an unpopular stock. It's being sold off, but they just keep growing their business. So they keep growing their business, and it's already a gigantic business, $115 billion of revenues. That 12% of growth on $115 billion, that's well over $10 billion of revenue growth. So to me, that's really impressive, a big green flag. So they sell a lot of revenue. What's their margin? Do they have a very good profit margin? Maybe that's where we got problems. We're going to compare this to United Healthcare, Elevance, which are, I think, good compares. Not perfect, but good. The profit margin is low. And maybe this is why the market is saying, hey, I don't like Humana, because look at this margin, 1.18%. Historically, it was at 3, 4, 4, 3, 4. So we're seeing a trend where they're getting squeezed. And that's not a lot of margin. This really is concerning to me. I just talked about a software company that had margins up near 80%. It was like high 70s. We looked at a biotech company that had 96% margins, and now we're looking at 1% margins. It's a very undesirable gross profit margin. They are not producing free cash flow, so they're really getting squeezed. So the 50% sell-off in Humana is understandable. It's not that, hey, people just don't like their logo, they should pick a different color for their logo. No, there's some fundamentals that are showing there's something broken in this business and it needs to be repaired. Now let's take a look at the quarterly and see if maybe the quarterly is showing that, hey, they realize that something was broken and they're beginning to fix it. Let's take a look. And hopefully, nope. Profit margin for the quarter, 1.6%. Free cash flow is positive. That's good. And they had a really tough fourth quarter in 2023. I mean, everything was like not working. This profit margin really concerns me. So let's kind of keep this in mind. So we have low margins. That's a giant red flag for me. Let's take a look at the balance sheet. How much debt are these guys carrying? So we have EBITDA of 3.69. Okay. We have debt of 13 billion. So they are carrying a lot of debt. Wait, cash 24 billion, debt 13 billion. Okay, so they're doing fine. Their balance sheet's fine because they're carrying more cash than they do debt. Okay, very good. So not worried about their balance sheet. They got plenty of cash. Let's take a look at United Healthcare. Compare their metrics over to Humana in a bit. We'll look at United, we'll look at Elevance and see what they're looking like. So United Healthcare, I was a stockholder for multiple years. I did really well at the stock. It was a very well-run company. You look at this upward chart, very beautiful. But if you see from here to where they are now, you'd actually be losing money if you're a holder of the stock for the last 2 years. And a big part of it is that, really, really bad situation with the CEO getting assassinated. It's just a horrible, horrible story. I'm a father of 2, and to think about a dad, getting assassinated and being taken from his kids, I think about those kids whose lives have been, really changed, as well as his wife and everybody else that was in his immediate family and community. So, just terrible story. I think United Healthcare is a very well-run company. And I know that there's a lot of tension between the public and some people, I would say, in the public, maybe that had a very bad experience with health insurance companies. I can understand that being super frustrating when somebody's sick and you care about them, or you yourself are really sick and you get frustrated. So they've really, the healthcare system, that's getting back, Mike, to, are these companies discounted in just a fabulous opportunity? This particular industry to me is, man, there's just too much radiation. There's just too much there that is like, what's going to happen? I think the public opinion of insurance payers is really low. The trust is not there. Politicians are attacking insurance companies. They're just hammering them. It's kind of like the convenient villain in the story. And I think that's going to continue to put stress on their industry. Their margins are going to be squeezed. The industry is going to be squeezed. So that would be one thing that's a giant red flag for me is, okay, this industry is either it's either their fault or just bad luck, or however it happened, they're in a bad situation. So let's continue on, look at the fundamentals, but we will return to that kind of storyline. This is a massive cap company, 459 billion in market cap, 393 billion in revenue. PE of 32 now. In the future, it'll be 17. Strong buy, I don't know. I think there's more outflows than inflows, but that's what analysts said, and it's discounted by 23%. When you look at this company, it's a massive company. Total revenue is almost 400 billion, and they're growing at 9%. Holy smokes, that's big growth. When you look at that type of growth, it's like they're growing 3.6 billion per year. It's massive. So good job on the growth. Profit margin. See, their profit margins are really collapsing. Look at that. We saw this with Humana. Going from 6 to 3 is that's a collapse, right? And if this continues, the fundamentals are following the general story that these guys are getting squeezed. There is public opinion that, hey, government, federal government, senators, congressmen and women, go do something about it. So they may take it on and start squeezing these insurance companies and putting more cost on them and reducing their revenues and profits. You're seeing the fundamentals change. So that's really catching my attention that, hey, am I seeing the beginning of something that's going to be bad for United Healthcare? We saw it was bad for Humana. So Humana was at 1.5% gross margin or so. And this one's at 3.6, but it's been dropping. Okay, this is not good. This is bad. So I would be watching that. That tells me kind of what I need to know on United Healthcare. I was a stockholder. I sold my stock. I have a lot of respect for United Healthcare. I am a United Healthcare customer. My family has been on United Healthcare for a long time. And I would tell you that we are happy customers using their insurance. Has every experience been perfect? No. Generally, in the time that I've had United Healthcare, I've had my younger son was born, very happy with how they covered us. We've had a couple of situations that needed healthcare, very happy with how they treated us. A couple frustrating moments, but let's face it, even my favorite restaurant screws up once in a while. So not every situation is perfect. All right. So these guys, their balance sheet should be strong. Their total debt is going to be about 45 billion, but their EBITDA number is 35 billion. They can pay off debt in a little over a year. And overall, I think if we look at their free cash flow, their cash flows, let's see how that's doing. It's been a while since I've looked at United Healthcare. See, this cash flow is dropping. So they're getting squeezed. If I look at this cash flow, the perception of the industry, I think the company is worth around 200 billion, and it's well north of 200 billion. So I am a seller of United Healthcare. I already sold it. I sold it a couple years ago. I continue to sell United Healthcare. They just became really expensive stock. And now we're seeing their fundamentals really change. And those fundamentals, it's going to be hard to get those margins back up. I switched horses back in the day and bought into Elevance, but I have sold out of Elevance in 2024. Let's take a look at their fundamentals. Elevance is somewhat of a smaller United Healthcare. They do very similar. They compete against United Healthcare. They're just a much smaller cap company. And the revenue is really good. It's really high. PE is really low. Forward PE is really low. Really discounted according to analysts. I mean, look at all these metrics. Looks good. When we look at their revenue growth, the revenue has been slowing down. And yep. Now they had a very bad Q2, and their stock price has not been doing well, by the way. Down 20% for the year, but look at from September to now, that's really where we've seen just a big drop, maybe 25, 30% in their stock price. So let's take a look at that gross margin number. What's going on with gross margin? So these guys are holding their margins, okay? Much better than United Healthcare. They had their margins really nice, but you saw their valuation was really high at nearly 500 billion in market cap. These guys, you can see operationally, these guys are not screwing up. From a free cash flow perspective, their cash flow is also going down. So we just saw 3 companies, health insurance companies, that cash flows have been vaporized. So having said that, I'm going to be very careful in not overbuying into health insurance payers. Elevance, United Healthcare, Humana, and even CVS that has a health insurance payer component to it. They're more diversified, and I think that's a good thing for CVS. But you can see that Elevance, as well as United Healthcare and Humana, there's something here that has to be figured out for this industry. You know, as an investment, I mean, Elevance, out of the 3 we just saw, Elevance, United Healthcare, Humana, Elevance is the one that I would pick. I just showed you fundamentals that show that the company is not as not their performance is the best of the 3. If you look at gross profit, their cash flow looks good. I believe they're discounted. If you look at fundamentals, the revenue is good. I think the one that's overpriced is United Healthcare, and then Humana is kind of a wild card. If they figure it out, I think that stock could really, really go up because it's so discounted. But that's the art of investing, is we have to be good at math, be good at science, I guess. But we also have to put a lot of qualitative information together and say, this is what I think is going to happen. And it makes it really fun. This space here, I'm being super careful with it because it's just been really underperforming. And I don't know that we're seeing the light at the end of the tunnel all that close. We may be in for another year of pain and suffering within this space. So those are my comments. I think a few people are interested in these stocks, and hopefully you found my information interesting. So good luck out there.